Welcome back to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We've had an action-packed day live inside ETFs in Hollywood, Florida. And helping me wrap up the day is Chuck Self. He's the CIO and COO of iSectors. And we're going to discuss what you need to do with your portfolio should the market get a correction. So, Chuck, thank you for joining us.
Well, thank you, Jill.
The obvious question is, do you see a correction on the horizon for 2018?
Well, we are actually fully invested as we speak today, but the research shows that in an average year, we get an 11 to 14% correction almost every year. So last year was a little bit of a different thing because we didn't get one. But this year, you got to say at some point it's likely we're going to get a correction. I don't think it's going to be soon. I think it's going to be a second half event, right. and I don't know if that's going to.
Well, what should investors do if they want to protect their portfolio from a recession, if they think that there could be somewhat of a pullback back in the market?
Well, there's three things they could do. The first thing is that if the correction comes because interest rates are going up, they should be shortening the maturities and durations of their portfolios. iSectors has a capital preservation strategy that analysts can use that uses bank loans and other short-term securities. The second thing they should do is they should start diversifying their portfolio more. The problem with most people's portfolios is that they're under-diversified, and especially with the market going up. And so we're suggesting, and the research shows that if you take 10% from equities and 5% of fixed incomes and put it into a liquid alternative, like the iSectors Post-MPT ETF, which is on Nasdaq, PMPT is the symbol, and if you put in something like that, you'll get greater diversification. And then finally, for the more sophisticated advisors and investors, they should be looking at inflation protection and precious metals type strategies, which again, iSectors have available
that's been a common theme so far for day one of Inside ETFs, so starting to look more at those commodity type ETFs. But to wrap it up with this, does correction mean recession? And is correction necessarily a bad thing, or could it present some opportunities? Well,
a correction doesn't necessarily mean recession because, as I indicate, on average, we have an 11 to 14% correction even in bull markets. So we don't think that recession is certainly a 2018 or probably not even 2019 event. But we are moving from the mid-cycle to the late cycle type of a place in the economy, and the kind of stocks that you want to own in a late cycle are different. The technology stocks have done so well are great mid-cycle stocks, but you want to be more defensive in the late cycle. So people should stay fully invested. They shouldn't go to cash. Cash is trash, but you certainly should be going to more defensive stocks in anticipation.
All right. Well, thank you very much for joining us at Inside TV ETFs and Traders. Thank you for spending the day with us. I'm Jill Malandrino, global markets reporter at Nasdaq.